High-yield ETFs for passive income. $3,900 a month strategy revealed. Have you ever looked at your bank account and felt that familiar pang of worry? That quiet anxiety about whether your savings are truly working for you, or just sitting there, losing value to inflation? What if I told you there's a powerful, straightforward way to potentially generate a substantial, reliable stream of passive income? Enough to add an extra, say, $3,900 a month to your life, without having to actively manage a portfolio every single day? Before we dive in, if advertisements should interrupt this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for bringing you this valuable information. Now let's continue. This isn't about risky day trading or complicated option strategies. This is about building a rock-solid foundation for financial freedom using one of the most powerful and often misunderstood financial instruments available, high-yield ETFs. I'm not talking about some get-rich-quick scheme. This is a proven, long-term approach to wealth building and income generation that has been quietly transforming the financial lives of savvy investors for years. The core problem and the promise of the solution. The old way of thinking about investing often leaves people feeling overwhelmed. You hear about individual stocks, bonds, and mutual funds, and it all sounds incredibly complex and time-consuming. You feel like you need a finance degree just to get started. But what if you could bypass all that complexity and still tap into the earning potential of these markets? What if you could own a diverse basket of income-generating assets, all wrapped up in a single, easy-to-buy security? That's the promise of high-yield ETFs. They are the ultimate set-it-and-forget-it tool for generating consistent, passive income. Today, we're going to pull back the curtain on this strategy and reveal exactly how you can build a portfolio designed to deliver that $3,900 a month target. What is an ETF? A simple definition. Before we dive deep, let's start with the basics, in the simplest terms possible. An ETF, or exchange-traded fund, is essentially a basket of different assets, stocks, bonds, or even other investments, that you can buy and sell on a stock exchange, just like a single share of a company. Think of it like this. Instead of going to the grocery store and buying a single apple, a single orange, and a single banana, you buy a pre-packaged fruit basket. That basket is your ETF. It instantly gives you diversification across many different holdings, reducing your risk and simplifying your life. So, instead of researching and buying dozens of individual dividend-paying stocks, you can buy one single high-yield ETF that already holds all those companies for you. It's instant diversification and instant access to a world of income. The power of high-yield ETFs. Now, what makes a high-yield ETF so special? It's all in the name. These funds are specifically designed and managed to prioritize paying out a high percentage of their earnings to you, the investor, in the form of regular dividend distributions. These aren't your typical growth stocks that may or may not pay a small dividend. High-yield ETFs are engineered to be cash flow machines. They often focus on assets with a history of strong dividend payments, such as real estate investment trusts or REITs, which are a cornerstone of many income portfolios. They may also hold high-quality bonds, master limited partnerships, or even companies that generate income from lending or selling covered call options. The beauty of this is the predictability. You can get paid monthly, quarterly, or semi-annually, providing a stable income stream that you can count on month after month. The $3,900 a month strategy, the simple math. So, how do we get to that $3,900 a month figure? The math is surprisingly simple, and it's the core of this strategy. To generate $3,900 a month, you need to earn $46,800 per year in passive income. Now let's say we find a collection of high-yield ETFs that on average have an annual dividend yield of around 12%. That's a powerful number. To generate $46,800 per year from a 12% yield, you would need to have an investment portfolio worth approximately $390,000. Now, I know what you might be thinking. $390,000, that's a lot of money. And yes, it is. But here's the key takeaway. This isn't about having that amount in your bank account today. This is a target you can build towards over time through consistent investing and the incredible power of compounding. The strategy is to build a high-yielding, diversified portfolio that works for you, so you don't have to work for it. Part 1. The core portfolio, high-quality dividend ETFs. Our strategy is built on 3 pillars. The first pillar is the core portfolio, which focuses on stable, high-quality, dividend-paying companies. These are funds that hold household names with a long history of increasing their dividend payouts. Think of them as the reliable workhorses of your portfolio. For example, a fund like a high-yield dividend ETF might hold a basket of companies from different sectors: healthcare, consumer staples, technology, and energy, all of which have a strong track record of paying and growing their dividends. These funds provide a solid foundation of income, and their diversified nature helps protect against the volatility of any single company. They are your anchor. Part 2. The high-yield component, income-focused ETFs. The second pillar is where we supercharge our income. This component focuses on more specialized high-yield ETFs that are specifically designed for maximum cash flow. These are often known as income funds or covered call ETFs. A covered call ETF, for instance, uses a sophisticated strategy of selling call options on the stocks it holds. This generates a powerful stream of premium income, which is then distributed to you, the investor. This is an advanced strategy managed by professionals, but you get to participate simply by buying the ETF. This is a key component to achieving that high 12% average yield. You're not just relying on dividends. You're also tapping into other sophisticated income-generating methods, all through the simplicity of an ETF. Part 3. The growth component, a sprinkle of innovation. The final pillar is a crucial, often overlooked part of this strategy: a small allocation to growth-oriented high-yield ETFs. These are funds that might focus on sectors like technology, biotechnology, or clean energy, where the potential for capital appreciation is higher. Why is this important? While our primary goal is passive income, we also need to protect our portfolio's purchasing power from inflation. A small allocation to growth-oriented funds allows our total portfolio value to potentially grow over time, ensuring that our $3,900 a month income stream can buy just as much in the future as it does today. This provides the perfect balance: a strong income foundation, a powerful income-generating component, and a touch of long-term growth. The step-by-step blueprint: how to get started. So, how do you put this into action? It's simpler than you think. Step 1. Open a brokerage account. You'll need an account with a platform like Fidelity, Schwab, or Vanguard. This is where you'll buy and sell your high-yield ETFs. Step 2. Fund your account. Start with whatever amount you are comfortable with. Remember, this is a journey, not a destination. You can start small and add to it over time. Step 3. Research and select your ETFs. We've talked about the different types. You'll want to look for ETFs with a strong history of high dividend payouts, a good track record, and a low expense ratio. You can easily find this information on financial websites and through your brokerage platform. Step-by-step blueprint continued. Step 4. Invest. Once you've selected your funds, you simply place an order to buy them, just like you would with any other stock. Step 5. The most important step: reinvest your dividends. This is where the magic of compounding happens. As your ETFs pay you dividends, you can set up your account to automatically reinvest, that cash to buy more shares of the same ETFs. This means your income stream grows, and the next month, you'll earn even more. This is how you accelerate your journey to that $390,000 portfolio and that $3,900 a month income stream. Imagine this. You receive a dividend payment of $500. Instead of taking that money out, you reinvest it. That $500 buys you more shares, which will then pay you even more dividends in the future. It's a snowball effect that builds and builds over time. Real-life relatable example. Let's put this into a real-life scenario. Think about a couple, let's call them Sarah and Tom, in their late 40s. They have a solid nest egg, but it's not working hard enough for them. They're worried about retirement and the rising cost of living. They decide to allocate a portion of their savings to this high-yield ETF strategy. They start with a portfolio of $200,000, invested in a diversified mix of high-quality and high-yield ETFs. Their average yield is 10%. That's $20,000 a year, or $1,666 a month in passive income. They don't stop there. They continue to add to the portfolio over the next 5 to 7 years, all while reinvesting the dividends. As their portfolio grows towards the $390,000 target, their monthly passive income grows with it, getting them closer and closer to that $3,900 a month goal. The emotional and intellectual connection. This isn't just about numbers. It's about the feeling of security and the freedom that comes with a reliable income stream. It's about knowing that your investments are working for you, even while you sleep, travel, or spend time with your family. This is about taking control of your financial future and creating a legacy for yourself and your loved ones. It's a strategy that empowers you to transition from being a worker for your money to having your money work for you. It's the difference between a comfortable retirement and a truly abundant one. Strong call to action and close. The path to financial freedom is not a mystery. It is a clear, actionable journey built on proven principles. The key is to start, and to start now. If this idea of generating a substantial passive income stream and the power of high-yield ETFs resonates with you, then take the first step. Learn more about these powerful financial tools. Don't let another day go by with your money sitting idle. Take control of your financial destiny. And if you found this information valuable, please make sure to subscribe to this channel for more insights on how to build wealth and secure your future. Give this video a like, and leave a comment below with your thoughts or any questions you have. We want to hear from you. Thank you for listening. Your journey to financial freedom starts here. Disclaimer: this video is for equipping, educating, and empowering and should not be considered financial advice. Investing involves risk. Always consult with a qualified financial professional before making any investment decisions. Your financial well-being is paramount.